And standing by is Oliver Sloup, Blue Line Futures. Oliver, this corn market and the soybean market really on a big higher note here today. What basically happens to the psychology of the market if we would close at these kind of numbers today and settle?
Well, it bodes very well, and I think from the psychological aspect, the soybeans probably have a little bit more of an advantage to work higher. Corn might be coming into some headwinds here against contract highs from last May. That's 442 to 445. I wouldn't be surprised to see maybe a light round of profit taking here. Ultimately, I think corn can continue to work higher over time, but it's prudent to manage risk after such a nice rally. Now, as far as soybeans go, as I had mentioned, we've had a nice run here over the past couple days, but I think that momentum is just building, something that we've been keeping a close eye on over the past several months. And the corn market is a funds net short position. The funds now have a net long position there, but still hold a net short position in the soybean futures. Also noted earlier this week, the USDA did very little, basically nothing, to adjust production for this year. We know that we've got wet weather in the works for the next 2 weeks, and if that continues to play out, we're going to start talking about potential concerns on the soybean crop. Obviously, they're a much more resilient plant and maybe a little later window, but again, if we get that wet weather to play out, I think there's opportunity for this market to continue to work higher. Obviously, $9 psychologically significant. Also around there, we've got the 100 and 200-day moving average. If we can move out above there, I think we see additional short covering from the funds, and that's where you really get a nice move higher. While
we're talking about technicals, is there a way to put a percent of chance that we could go back and check this gap down here around 420, 423 in this corn market?
I think that would be a very terrible thing. I think we had the opportunity to close it. We were just a stone's throw away from closing it. The market had the chance to do it and couldn't do it. If we were to go back down there, I think that the top would be in the market. I don't think we'll be able to get back down there. We really want to hold support that is now above those gaps that were left unfilled. So I think we can continue to kind of feed off this momentum going into the weekend and at least hold ground in the next week. I think we'll have a good opportunity to see higher prices over the coming month. One thing to keep in mind, option expiration for July options is next Friday. Might also keep a little bit of a lid on things very near term, but longer term, still like higher prices for the grain markets.
So is this still a weather market, or have we now officially almost switched to a yield market in the corn and will switch to a yield market here in another couple of weeks for soybeans?
Well, I think you could make the argument that those things go hand in hand, and I think that's going to continue to put premium into these markets, especially as the money flow continues to feed on itself. The grains work the best when they all work together, and when you see this fund buying across the board, corn, soybeans, and wheat, that's when you really get the momentum going. I think that's what we've seen here this week, and that's what we're expecting to see in the coming month.
Okay. Stay with us, because Oliver will join us on the other side of this break to talk about the livestock and what the final few moments look like. That's coming up next here on the Market Day Report.